If you are a small business owner and want to do your own bookkeeping but don't know how, this video is for you. I want you to think of this as your bookkeeping 101 crash course. Here at doola.com, we've helped thousands of small businesses not just do their books, but go from dream idea to dream business. Over 10,000 businesses from over 175 countries. And we've raised over $13 million of venture capital from some of the world's best investors, including Y Combinator, Nexus Venture Partners, HubSpot Ventures, Dharmesh Shah, Sahil Bloom, Cody Sanchez, Graham Stephan, and more to support us in this mission. Here's the thing, and I'll admit this, bookkeeping is absolutely not the sexiest thing or exciting thing ever. It's probably one of the least exciting things. But here at Doola, we truly do have this down to a science. By the end of this video, you are actually going to know what bookkeeping is. No fluff here. We're actually going to give you true exact definitions so that by the end of this video, you can actually understand what bookkeeping/accounting is. You're also going to understand why it matters, and we're going to give you tactical steps to do your own bookkeeping. Without further ado, let's dive in, or as we like to say at Doola, let's Doola it. First, let's start with defining bookkeeping. Bookkeeping is defined as the process of defining all your company's financial transactions so you can see exactly where your business is spending money, you can see exactly where your revenue is coming from, and you know what tax deductions you're able to claim. Now, that might sound like a lot of jargon, but let's actually zoom out for a second. Why does bookkeeping matter for your small business or your big business? Well, bookkeeping matters because it helps you catch more tax deductions. Therefore, when you record and categorize transactions in your business, you're then going to be able to see which expenses are tax deductible. And this allows nothing to fall through the cracks. Without year-round bookkeeping that's happening on a monthly basis, you are going to forget about those one-off miscellaneous deductions like lunch with a client you had that you could have deducted, or that business expense you made 6 months ago that you completely forgot to log. Look, even if you have the best of intentions, and all business owners do, deductions are going to fall through the cracks when it comes to tax time, unless you have solid bookkeeping in place to catch these things as they occur. Another huge reason why bookkeeping matters is that it can actually help you get a business loan. If you are applying for a small business loan from a bank or individual, banks are going to actually need to see financial statements. And when I say financial statements, I don't mean the type that you can simply download from your online bank account. You're going to need to have something that truly shows your expenses and revenue in financial statements. And this is also known as an income statement. This is going to be something you're actually able to get through solid bookkeeping. So even if you don't need a loan now, if you do want a loan in the future, this is going to be something you should absolutely prepare for. Bookkeeping matters because it can truly help you catch these types of financial mistakes. When you're bookkeeping, you're keeping an eagle eye on the transactions in your business, which then means you'll be able to catch things like invoice mistakes, bank errors, paying someone twice, and those sneaky subscription fees for services that you forget to cancel. Bookkeeping matters because it gives you a much clearer picture of where your money is going. When you have bookkeeping in place, you're then going to be able to keep track of all of your expenses, which helps you budget better. You'll also be able to have a better understanding of your cash flow. What's an expense versus a payment, or what was a loan versus a credit card expense? You'll also be able to track how your business is growing and improving over time, and which months are busy versus which months are slow. This is going to help you plan for the future. At the end of the day, you can only manage what you measure, and bookkeeping is giving you the fundamentals to measure every aspect of your business when it comes to the financial side. Now let's actually dive into the steps to doing your bookkeeping. The very first step is you've got to separate personal from business expenses. You want to make sure at the beginning of the day, not the end of the day, that business and personal transactions are separate. This makes it crystal clear to the IRS what your business is earning, spending, and then what your bottom line profit is. This is critical for C corporations especially, to have separate bank accounts for personal and business finances. C Corps open themselves up to legal problems when their finances aren't separate from personal transactions. The second step is to actually choose between single or double entry accounting. Let's define those terms and put them into English. Double entry is a system of accounting that tracks where your money comes from and where it's going. Essentially, you're recording every transaction twice, taking assets from a credit and putting it somewhere else called a debit. Your debits and credits should then always equal each other. This is how you know that your books are truly balanced. That's what it means to balance the books. Let's do an example. I buy a new laptop for my business and it costs $2,000. I then subtract $2,000 from credit card or credit account and add $2,000 in assets to debit account. Yes, I lost $2,000 in cash, but I gained $2,000 in the form of a new asset. Double entry accounting is kind of like double checking your homework. Therefore, that's double. What is the single entry method? Single entry is essentially just recording your transactions once as they happen. It's definitely less robust, but if your business is as simple as a sole proprietorship with no inventory, no employees, you can probably use single entry. If your business is any more complex than that, an accountant's probably going to recommend that you do the double entry method instead. The third step is now to choose between cash versus accrual accounting. Let's define what each of these are in English. In a cash basis, you're only going to recognize revenue when you receive it. Let's do an example again. I love examples. When you deposit a check into your account. On an accrual basis, you're going to recognize that revenue when it's earned. For example, let's say I'm completing a project for someone and I give them an invoice. If you're a small business or just getting started, you can probably use the cash method. It's very easy to switch from cash to accrual if you need to, if your business is more complex. For example, if your business earns more than, let's say, $4 million per year, or if you manage large assets or investments, you'll probably then need to switch to the accrual method. Either way, you should talk to an accountant to figure out which method will be best for you and your business. Step 4 is to choose a bookkeeping system. Your options are you can do this manually if you'd like to use Excel or paper, or use accounting software. Full disclosure, I don't think you should use pen and paper. Seriously, don't use pen and paper. You want a digital record. Now, you could use Excel. And if you use Excel, we're happy to provide a template or a resource to help you find and set up a simple bookkeeping setup. In this template or in a simple Excel template, really all you have to do is enter transactions as they happen. And if your bookkeeping needs are straightforward, this is the easiest and cheapest way to go. If you want to get access to a template or a guide like this, just contact the Doola team and check out the links below. If you choose to use accounting software, there's actually a couple options for small businesses that I recommend. You can check out QuickBooks, you can check out Xero, and you can check out Wave. For this type of software, you're going to pay a small monthly fee, and that'll help you create these financial reports. Please keep in mind though, you actually may need to have, unless you have expertise here, an accountant or a bookkeeper set up the software properly for you. Step 5 is to categorize your transactions. Categories are essentially classifications for your transactions to help you understand what you're spending on. These types of categories can actually help you understand what your tax deductions are. Here's the thing though, not all transactions are equally tax deductible. Therefore, you need to know what you're spending on in terms of office versus supplies and what you're spending on for meals. Let's do an example. Let's say I buy some ink for the printer in the office. I'm going to categorize that as office supplies. At the end of the year, I'll then be able to see the total amount that I spent on office supplies, and then I can deduct that cost on my taxes. Step 6 is to actually organize and store your documents. It's critical to keep records in bookkeeping, but there's a bit more to it than just simply storing your receipts in a drawer or file cabinet. Here are 2 very important rules you should keep. Rule 1 is if the expense is over $75, you should probably keep a record to prove the expense. Rule number 2 is you should keep all of these expenses and financial records for 3 years. In terms of actually keeping the records, I'm going to recommend again doing it digitally. The IRS is completely okay with digital, and it's way easier for you. By the way, the IRS stands for the Internal Revenue Service. Now, you're not going to actually need the receipts to file taxes, but in the case that you get audited, you will then need them. Don't sweat, there's actually a lot of tools that can help you digitally manage receipts. Finally, the last step is to make it a habit. Bookkeeping is absolutely not the most exciting thing, or the most sexy thing. It's actually probably the least exciting, least sexy thing out there. But if you do it consistently, you are going to have financial insight into your business every month and every day of the year. But the best thing is it's going to save you a ton of time and stress in terms of headaches at tax season. This is the minimum recommendation I would say. Enter in your transactions at least once a month. Again, use your calendar. Block out a recurring time, do it somewhere fun. It could be a coffee shop, it could be on the couch while you're watching TV, watching football, watching Netflix while you do work. The thing is, the more automatic this habit is, the easier it's going to make your tax season. At the end of the day, nobody wants a stressful bookkeeping season or a stressful bookkeeping binge. Now, let's cover another question that comes up. Should you do your own bookkeeping or hire someone else to do it for you? Let's run through both of those options. The biggest pro of doing it on your own, it's free. That's the biggest draw. However, the cons are, it can be very time consuming, it can be complicated, and it's taking you away from running your business. And who else is going to be able to run your business better than you? If you truly are interested in doing it on your own, we can help you provide a free link or template to guides to help you do this on your own or DIY. If you decide to hire someone else to do your bookkeeping, it's going to do a few crucial things. One, it's going to give you time back. Hiring someone else to actually do your bookkeeping is going to give you more confidence that your books are being done properly. This is also going to make tax season a whole lot easier. And that is a wrap. The doula team can't wait to help you. At the end of the day, you don't rise to the level of your goals, you fall to the level of your systems. And if you want to be on top of your finances and have good financial health, you need a system in place. That system is bookkeeping. Thanks so much for watching and see you in the next video.